Here are your numbers here for the fiscal first quarter. EPS coming in at 94 cents a share. That's about 1 cent more than what the street was looking for on average. Revenue coming in at $12.94 billion. That's a smidge below the average of street estimates, which were basically $12.99 billion. So a modest miss on that number. Inventory levels coming in slightly below what the street was looking for at $8.7 billion. And I know, Katie, you're really interested here in the China revenue, Greater China revenue, coming in the quarter at $1.74 billion. That's a miss. Street was looking for 1.83. And just real quickly, Katie, a correction here on the EPS number. It was 94 cents a share. The street was looking for 75 cents a share, so a much bigger beat than what I said from a penny, 94 to 75. You do the math there, Katie Greifeld.
Not very good at math, but you can see that the shares bouncing around after hours, not quite sure what to do with that. Currently about 0.7% higher as traders parse through some of those numbers.
All right, let's get some insights here on what's going on with Nike and maybe the broader consumer space as well. Michael Wolff is the founder and CEO of Activate, and he joins us now here in Studio 2. And Mike, let's start off first, I guess, with kind of what Nike represents here. Is it a luxury brand? Is it just kind of an everyday consumer staple at this point? What is it to you?
I mean, it's still the favorite brand among so many people. Tremendous amount of brand power, and yes, it is a luxury brand if you compare from a pricing perspective, but that brand has so much power. And when you look at the growth over the last couple of years on a compound annual basis between 21, they're 23, they're on a fiscal year, you see about a 7% growth. But even between 22 and 23, they had 10% growth. I mean, it's the law of large numbers. They've gone from 46 billion to 51 billion from last year.
And we talk about a growth, though. I mean, at least in the last few quarters, it's slowed. The growth rate still growing in terms of revenue here.
Yes.
When we talk about the power of that brand here, how much of an immunity does that provide for a potential downturn in consumer spending?
In a lot of ways, people keep looking at this and thinking it's a bellwether for consumer spending. And if you look at the earnings, they've really been affected not because of consumer spending on their products, but really because they've had way excess inventories, which they've had to burn off. As a result, they've increased their SG&A because they're advertising to get rid of it. And China is a huge challenge for them. And it's not just about the Chinese economy. They have a strong competitor in Li-Ning, which is a Chinese brand. And in a lot of cases, it's for a lot of Chinese consumers, it's preferred.
Is it preferred because it's better, or is it preferred because of the political climate where the Chinese government says support Chinese companies?
Well, it's the political environment. They don't have anywhere the kinds of near-star athletes. But the bigger story about Nike is the transformation of this company into a direct-to-consumer business and into one that is digitally enabled and one that is driven by e-commerce and AI.
That's a good point. And Kate, I buy a lot of Nike products. And I can't remember the last time I bought one from a third party. I would go directly to the website.
Well, to that point, I mean, you have Romain on one end, but where are they in that transformation to becoming a direct-to-consumer company, and where's the limit there?
Well, but so in the last couple of years, they've eliminated 50% of their retailers. So right now, on a direct basis, they're around 45% of their volume is direct through their own outlets. They're expecting it's going to go to 60%. 25% of their sales are all digital. They're e-commerce, and they're expecting that also to go up to 40%. So this is a remarkable transformation. There are very few transformations that we've seen of a company in this direction. I mean, the only example I can think of that comes to mind is Adobe going from box software to being a SaaS company.
And really quickly, unfortunately, we only have about 30 seconds left, but meditating a little bit more on the power of the brand, you think about some of the U.S. competitors, especially in the running category. I'm thinking Hoka, for example. How does Nike stack up against that? Well,
Nike in a lot of ways is a cult unto itself. I mean, it's less about the functionality of the shoe, and it's much more about being part of their overall ecosystem and identifying with that brand.